Welcome traders to this video brought to you by Admiral Markets. Today's focus is the euro-dollar monthly candle of January, which was very bearish in fact, and a sizable candle as well, and we'll take a look what kind of consequences and impact that will have. Also, of course, the pound dollar, dollar yen, and Aussie in our vision. But first of all, this disclaimer explaining that the video is intended for a global audience. Please check admiralmarketsglobal.com and select your country of residence and contact an appropriate entity to find out if it is suitable for you. Also, please be aware that trading is considered high risk and may not be suitable for traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This video is just for informational and educational purposes only. And by continuing watching this video, you agree with the disclaimer that the risk disclaimer. You can always request a copy of that by going to admiralmarketsglobal.com and selecting your country of residence. This is the euro-dollar chart, in fact, and we're looking at the monthly candle, and you can see that the open was about 121, the close just below 111, just more than 1,000 pips, or the low I should say. The close in fact is at 113, so there's a pretty good massive candle here. There's a bit of a wick, but not all too concerning in my opinion. I mean, this is definitely a big bearish momentum. So if we look at the targets, then we've seen that we can already pass actually the minus 272 target here, and we're on the way, I would say, to parity, which is the minus 618 target. Now that could take a while. That will probably not happen tomorrow, but in the long term, that is the main target. If we zoom into the weekly chart, we can see that bearish momentum very strongly. There's just one thing though. Last week we had a bullish candle, excuse me. So after 2, 4, 6 weeks of bearish candles, we had a first bullish candle. So despite the fact that the monthly candle was a very bearish and sizable bearish candle, in fact, especially for the euro dollar, on the weekly chart we do see a bullish candle. So what I would expect based on these candlestick patterns that we see is a bit of an upside here, this bullish candle to get some legs to the upside, maybe even retrace part of it to the downside first to see part of the bullish candle being retraced like this, and then seeing a bounce off of those double bottoms, basically the weekly lows there, for a bit of a rally to retrace the monthly candle. All right, so let me zoom into the daily chart and I'll show you that you see you have two upside days here and some smaller sideways days. So if we put a fib on this smaller correction like that, I'm expecting price to get up to probably roughly the minus 272, the minus 618 for the moment. All right, that's 115 and 116. Also around 115, 116, what do we see here? If we zoom in a bit more, you'll see kind of a zone right in here where price goes sideways. So we see price falling, going sideways, and then falling. So if price gets back into that zone, it is another confluence of resistance that could stop price easily. So when we look at the potential for price to get to 115, 116, we would be also, or price would be retracing also part of this bearish candle. As you can see, it would be about halfway. If we put a fib on this bearish candle, and we will fib the entire candle like this from top to bottom, we will see that about 116 is the 50 fib and about 115 is the 38.2 fib. So effectively, if price gets up that high, if it gets up that high, it's kind of retracing at least 38 or 50% of that candle, after which I would expect the downside again to continue. All right, so that is basically my primary expectation for February. More downside, but definitely based on this monthly candle, I would expect last month's low of January to be broken. The question is only from when and where will we get that downside. And I think that at the moment it seems most likely to get a bit of a retracement first of all before seeing that downside continue. Okay, so that's basically what I'm looking for. But if we zoom into the 4-hour chart, we can see that so far we did have those two up days, as I said, up, and so far we're correcting like this. So what could happen is that if we do break this triangle that we see on the 4-hour chart, and perhaps on the hourly chart we see it a bit better, like that, all right, doesn't mean that a bearish break here couldn't lead, of this triangle, couldn't lead to a continuation of the downtrend. So, you know, a triangle break here could be interesting. The only thing is that because last week was bullish, as I said, we might see a retracement of that bullish candle and see a turnaround, for instance, at the 78.6 fib. So if we get a bearish break, the only thing is that I'll be cautious of the 78 and the 86 fibs, and even the 61.8, but especially the lower two here. All right. If price does break through those fibs and the bottom, then definitely, of course, things are looking differently, and we're probably going to break or go to 110, and if we break 110, we can go to lower levels. So these are the key levels, the triangle and the fibs here, and of course up in here as well, as you can see with those fib confluences between the minus 618 and the 50, and the minus 272 and the 38.2 fib. Now all what I just said on the euro is almost equally valid to the pound and the Aussie in my opinion, because they too have pretty big sizable bearish candles. Maybe not as big as the euro, but certainly pretty sizable. One main difference with the euro is that the pound is approaching a monthly bottom at about 148. So, a bit more support nearby. Also a bullish candle last week, but a bit bigger wick at the top. So there are some smaller differences, but there are a lot of similarities between these pairs. And you can see a bit bigger, perhaps on the 4-hour chart, a bigger consolidation here at the moment on the pound. However, considering the latest bearish impulse here, I do expect follow through to the downside at the moment on the pound. It's just that the entire consolidation and the bottom so close by, I'm therefore still a bit cautious with the pound dollar at the moment. Aussie is the same story here too, bearish candle. This looks ready to head to 75, which is the next psychological round number. And we can see that on the weekly chart we had a bearish candle. So contrary to the pound and the euro, we actually have a bearish candle. So I like the bearishness of the Aussie here, definitely more than the pound. I think pound at the moment is the least interesting. It also has the interest rate decision later this week, so that always makes it a bit uncertain. And we also have NFP on the dollar on Friday, by the way. So from these three so far, I like the Aussie, I like the euro, but I don't like the pound. The Aussie has, if we zoom into the 4-hour chart here, a bit of a bear flag going on. Maybe even the 1 hour is a bit better. As you can see here, kind of a top line like that and a bottom like that. So a break of that bear flag looks interesting to me. And if we put a fib like this, if it does break the bear flag to the upside here and expands the correction, then the 38.2 fib in the 50s here, any of these fibs in fact, could be interesting turning spots. Last but not least, the dollar yen. Looking at last month, we see a bearish candle, and that of course is certainly different than the strength we've seen on the dollar against the other three pairs. It didn't show it against the yen, primarily because we are in on if we look at the daily chart, or maybe the daily chart is a good one. We see basically here a consolidation triangle occurring. So this is kind of a pause in the uptrend. This is a consolidation that, normally speaking, would see a break to the upside and an uptrend continuation eventually. When that will happen is another question, because a consolidation triangle like that could easily see some ups and downs still before we have probably the bullish break. So the bullish break in the long term is something I'm very interested in, to see this weekly uptrend continue. For the moment though, I think it's in a consolidation and wouldn't expect it anytime soon. So I think we'll see a continuation of this triangle for this week and probably the next week as well, at the very minimum. So let's see if that indeed plays out. You can easily keep an eye on this trend line, or both of the trend lines in fact, to see what's going to happen. If it does break the lower trend line, by the way, then probably it will move down to this 50 fib, or if you use a weekly fib, it would be the 38.2 fib if you use this swing high, swing low. The most interesting webinar of this week, I think, is the importance of seeing Forex trading in probabilities. I would highly recommend to see that. That will definitely give you that edge in understanding how to look at the Forex market in probabilities is very important. So I would definitely recommend that. We got other good webinars as well. Weekly recap on Monday, conditions to avoid on Wednesday, and Tuesday, Wednesday, trading room lab webinars, Fibonacci and intraday strategy. So looking forward to see you in one of these webinars, and wish you all good trading, happy hunting. See you soon. Cheers.